Okay, so we're in the weekly chart of. Okay, so we're in the weekly chart of Euro USD, and we can see that there is a weekly fair value gap here. This one, from here to here, and basically the price has took the liquidity of the FEG. So like from interior, it's going to the exterior liquidity, which is like resting over here. These are the equal highs. So if you look here, and also there is an order block, and we have marked the order block's wick in this manner, so that like it's like divided into like 4 quadrants. So we are expecting the price to go here, and the final liquidity which is resting above, that's our basically drawn liquidity for the week. So we're in the daily frame now, and we can see that we have to basically mark the daily PD arrays. For example, here is a daily fair value gap, here is also a daily fair value gap, and we can see how these fair value gaps are respecting the price. Then we mark out the liquidity, the buy side liquidity here, and also the main thing is you have to mark out the previous day high and previous day low. So these are our important liquidity levels. So as we saw in the weekly, that the price took this weekly FEG, so it's basically taking the internal liquidity and it's going to get the exterior liquidity, which is this one, which is like resting above here, and we can see that this is like a low resistance liquidity run, so price gonna like shoot up. All right, so yeah, that's pretty much for the daily time frame. Let's go to lower time frames for further price action. Hello guys, so this is the 1 hour time frame of Euro USD, and we will plan a trade here, and I'll show you the trade I did like today. So first of all, by the way, it's the same chart that we looked in the daily time frame. This one I've just put it into 1 hour. So we went from weekly to daily, now 1 hour. So we trade in the New York session, which is from 7 a.m. So we're gonna mark out the 7 a.m. and we can type this as New York. So this is midnight, and we can mark the midnight price, which is midnight opening price, which is this one. That's the midnight opening price, and so we can just skip up to directly till the 7 a.m. to New York session. So here is where the things start to get like really straightforward, because our strategy is pretty simple. We just have to look at the like where the price is going, because the price moves only in like the price just does like just two things. It's either going to like seek liquidity above, like extra liquidity, or it's going to balance out the imbalances which it left while going to seek liquidity. So for instance, like here we can see in 1 hour time frame that the price came down to the daily FEG, it tapped it, and it took this liquidity. You can see that this liquidity is gone, and it's going back to this fair value gap. So we're gonna mark this fair value gap. So this is the trade which I took actually. So we will name this as FEG 1 hour, and then in our 1 hour time frame, our aim is gonna be that. So we can write it like minor buy side liquidity. So in 1 hour, we're expecting that the price will come down to this fair value gap of which is made in this 1 hour time frame during the London Open, and we're expecting that the price will tap this fair value gap, and it's gonna shoot up to take the exterior liquidity. So yeah, that's the pretty much the price action in 1 hour. Next, we're gonna move to 15 minutes, then 5 minutes, and then 1 minute. Welcome, folks. So it's the 15 minutes time frame, and here we can see that the price respected the consequent enroachment of this fair value gap, which is the 50% of the FEG, and it's going up, and we can see that it has closed above this down closed candle, and we can basically mark our liquidities here. For instance, this so like overall our weekly bias will be till this one, right? This is the buy side liquidity, and for daily we can aim for either previous day high or this minor buy side liquidity over here. But for 15-minute time frame, because we're basically intraday, like we're scalping, so we're gonna mark this one as buy side, and this will be minor buy side liquidity. So the next thing we will do is, like, once the price taps into the FEG, and here it's an ideal situation because it's tapping the consequent enroachment, and from here we can see the price went up, it shoot up, and it's closed over this down close candle. So we will go to more smaller time frames and continue our analysis. Hello guys, so it's the 5 minutes time frame right now. So we saw that in 15 minutes the price closed above this down close candle. So we went to a smaller time frame, and we can see that there is a fair value gap here. This is the 5 minutes fair value gap. So we can put a different color to this, and then we can see that the price tapped it, and it's basically going up. So it will reach till here. That's our basically draw on liquidity, the minor buy side liquidity here. And now that we can see that there is a fair value gap formation here, we can go to more lower time frames to make the entry, because we're gonna entry in 1 minute, right? And yeah, so also we can see that the daily open is here. So the day started from this, it went down, and it's going up and down, and it's gonna go more up and then basically close down. So it's basically open, low, high, and then close. So it's basically gonna be a green candle, which is indicating that in the daily time frame it's going to, or like in a weekly bias, it's going up to take down this liquidity above there. Anyways, so in 5 minutes we can see that there is a fair value gap formation, and when the price creates a fair value gap in 5 minutes, then only we need to like switch to 1 minute, not 1 month, 1 minute. So now we need to wait for some confirmations. So the first thing we can see is that, okay, so now it's the main part where like we need to entry. So we can see that there is a lot of equal lows here, and these equal lows are taken down by this candle. So there is a raid on liquidity. So this is basically the 2022 ICT mentorship, where the first thing is a raid on liquidity, and the next thing we're going to look for is a market structure shift, and a clear market structure shift gonna be here, followed by displacement. So displacement, like for example, there's a fair value gap here, there, and there. So now we can see that there is, we can just reduce, we can just put this off. Okay, so in 1 minute it's our entry, and so it's in the area of the consequent enroachment of the 1 hour FEG. Then there is a stop rate where it took all the equal lows from here, and followed by a displacement, because there is a market shift structure. And now we're gonna mark out the FEGs in the 1 minute time frame, and we're gonna look if the price is respecting that or not. So we're just marking out these, and we can clearly see that the price is like respecting all the FEGs. Now we need to put the OTE. So we know that overall that's our bias till this one, so minor buy side liquidity. But I usually don't plan till here, because like there will be a lot of retracements here. Like it's gonna go up, then down, up, down, up, down, up, and then up. So I just take my partials in around this level, and I take my full trade on this level. So we're gonna mark out this one, and yeah, sorry, we're gonna mark this one. I usually take partials here, and I'm gonna close the trade in this level. So let's see here. So there is a market structure shift over here. The price is respecting the FEG here. So this is the first distribution where it went, first presentation where it went up, then it retraces to this FEG, and it went up. So we will take trade at the second presentation. All right, so now let's see what the price does. Okay, we can see that the price is also still respecting the FEG, the 1 minute FEG. Down, it's closed below this one, and we can see that it's also respecting this FEG. We can see it's just closed in the down in the down part of the FEG. Now we can see that it's going up. I'm expecting there's gonna be a FEG here. Okay, so that's our next FEG. So this was our first presentation, and the next is right here. That's our next one, and we're gonna take a trade at this level. We're gonna put the stop loss exactly below this low, a bit below this low, and we're gonna aim for this liquidity. This is the lowest hanging fruit, or I mean you can just take out that one, but for now I'll take this one. And this, or like you can put this stop loss actually just below this FEG, because if the price comes in this level, it's gonna probably go that level. So we can just put it a bit low there. All right, now let's see what happens. So the first thing we see that this FEG did hold the first part, and price went down and took the liquidity of this FEG. So after taking the liquidity of this FEG, what's going to be the price doing? The price will take out this liquidity here, and it did take out. And after taking this liquidity, it came down to this interior. So you can see, right, it's going from interior, which is this FEG, to exterior, this buy side liquidity. It's again coming down. It's gonna come down to take the interior liquidity, then it's gonna go up. So that's how the whole price basically works. You can delete this for now. So what did we see till now? A stop rate, which is basically a rate on liquidity, a market shift structure with displacement. The price is respecting the displacement, and also there is an order block sitting here. This is basically an order block, and if we take the 50% of this order block, it's gonna be that, or we can just I mean not quarter, we'll take the 50% rule here. So yeah, also one thing is that we need to understand that for instance, let's You know what we can do is like we can take our first partials here. So we can just write here first partial. So we just write here first partials. It's gonna be second partials. Oh, my bad. So it's gonna be trade finish basically. That's our target and the first partials here. All right, so the first thing we notice is that we got our order block here sitting here. We took the 50% of it, and this is our second presentation, and we're gonna take a entry here. All right, so let's see how it goes by. So you can see that we got tapped in here. The price moved below, so we just got tapped in there. Now we can see the price is closing above the consequent enroachment of this FEG, which means that it's respecting that FEG, and there is a huge green candle. All right, so we got our first partials there. It created two big FEGs. So that's the first one. There's one more FEG there. Let's see how the price works out. So we basically took our trade in this second distribution phase, and our stop loss is just below the first presentation fair value gap. We got our first partials here, and we need to finish the trade here. So we got two FEGs. The price is still above it, and boom, there we go. That's how we got the trade. And this is the trade at which I took like just some time ago, like 2 hours ago. If you continue to look how the price is respecting this FEG, just tapping the consequent enroachment and going up. That's how basically market works. For example, here we can also see that the price made this high, which is, oh my bad, this high, which is exterior liquidity. While doing this, it made a lot of fair value gaps. It came down to balance out these inefficiencies, and again it went up to create one more high. This is a higher high, so this is one more exterior liquidity. Then again the price went down to this level, one more FEG. Also, if you mark out this order block, we can see that it's the 50%, or we can just put this in a quadrant. We can say it's tapping the first quadrant. Okay, so it's tapping the first quadrant. And the price is basically going up. That's how it is. So that's we got this one as of now. But like if you want, you can trade till the minor buy sell liquidity, or actually till here buy sell liquidity. But I just don't take it because I don't have much time for it. As you can see, we took out that liquidity too, and currently the market is in this kind of situation here. Well, that's it. So what did we see here is that, well, it's kind of respecting this one here also. So what do we see? We took our trade after a market shift structure. Before that, stop rate, the first presentation, we did not trade there because it's risky. We just wanted to like verify this one. We took in the second distribution. We put our stop loss up just below the first presentation FEG. We are gonna take first partials in the lowest hanging fruit, which is this swing high, and we're gonna trade. We're gonna finish our trade in this second swing high, and we got a decent 2.77 RR. And later we can see how the price moves from exterior into liquidity to the interior, then again exterior, and then interior. And then we can see that here also the price respected this FEG. It tapped on this. It's basically this down close candle is an order block, and it went up to take this two liquidities at once. Because you can see, like, basically also there is a level here. You can see here. Like basically all these are low resistance liquidity runs, so it's gonna like just shoot up. That's how it works. Price went from exterior and it's coming down to take this interior liquidities, and it's again going up. So that's how the price action works. And this is basically ICT. And if you want to learn, you can watch ICT himself. He made a lot of like playlist, and from which you can learn the core concepts and all stuff. So yeah, so that's it for today, and I'm gonna record again in the next trade I take. So yeah, it was a pretty decent trade, and yeah, see ya.